Start the recording and officially good morning, traders. Happy Wednesday. Welcome to the Market Watch Group Wednesday Market Midpoint. I am Scott, as always. And I will be your host. Whoops. Yeah. Okay. Education and illustrative purposes only. Decisions made are at your own risk. We're not brokers. We're not advisors. You can see it there. It's all right there. What are we going to do? Opening analysis. Market looks okay. We're kind of like saying, oh, this is okay. The inflation wasn't really bad. It was mostly the same as what was projected and just a little marginally higher. So this might be the environment for that rate cut. Well, yeah, I think the probability is leaning that way, where you get the cut maybe in front. I said I'm open to it. I want to see a little more data come in. Maybe some more labor market data to be like, oh yeah, you know what? It's better. I think the Fed's the same way. So we'll look at the market is up. Futures are up. We'll take a quick peek at halfway now. Well, not quite. Halfway through today, we're halfway through the market. We look at it and say, how's this look relative to what we were posturing for? Right? Let's just check in on it. We'll look through our opportunity lists. Still setups. We looked last night. Still setups. Good morning, Vladimir. Good to see you, sir. And we'll talk just a little bit about record keeping because record keeping is so critically important. It's a funny thing about it. But there is a set of books written by the same author. And I say written loosely because really these are just the words of traders because they're interviews. And they're called wizards. So the original one is called Stock Market Wizards. And then there's one called Market Wizards. There's one called New Market Wizards. There's one called Hedge Fund Wizards. And they're nice because you read and you can read one section independent of any others. It's not chapters you have to remember. You just pick it up, read an interview. And the original one, it's got guys going back to the 1950s, and this is basically like he was able to get interviews with some of the most successful, consistently successful traders, in the markets. And then you get to hear just a little bit of the mindset, right? And it is interesting. It shaped how I trade, how I teach, how I develop my philosophy. You find common ground in places like risk management and consistency and discipline, psychology, right? And then you realize that on top of that foundation, you can find long-term traders, short-term scalpers. You can find stocks, options, right? No matter what else it is, it's just where's the success found on that foundation. Now, what am I leading to? Because you're like, yeah, we've heard you say all this, Scott. At the end of it all, someone asked him or said something to him, and he was doing a presser for his book, and in one of them he gave this quote. This is now Jack Schwager, Schwager, Schwager. He's a very Schwagerly guy. Jack Schwager wrote the books, so he was the interviewer. And his quote was, "Show me a good record keeper, and I'll show you a good trader." It was a long story leading up to that. That was the soapbox moment right there. Show me a good record keeper, and I'll show you a good trader. That's pretty simple and conclusive. Because if you are a good record keeper, you're either going to A, see that you're not making money and stop doing it, or B, make adjustments to to tweak it so that the record keeping is like, oh, look, now you are making money. And then you keep doing it because you're making money. Or C, you're going to keep doing what you're doing because it already shows you're making money. But it's 1, 2, 3. And at the end of the day, if it's 1, you're no one's talking to you. You already stopped. Good record keeping equals good traders. All right, let's go do it then. Let's start here. Let me give this a quick refresh. Let me get a new page, I guess. Jeez. What's going on with the Yahoo? Maybe it's my internet. Huh. I'm spinning everywhere. All my web pages. All right, let's go to the charts. We'll go to the charts instead. I don't know what's going on. All right. Minute before. Good day yesterday. Set to open around 6:45, so it's not enormous, but looking for another good day today. Here's the ES. 0.3%. It's very strange that my web page has been working all day. Now it's not working. Huh. Yeah, everything's spinning. What if we go here? Finance. Yahoo. Go. All right. Sorry, I don't know why that other page isn't working. There it is. 0.29, 0.34, 0.39, 0.76. When we see money going into when we see them going into the small caps, obviously our interpretation is that is higher projections of money moving into small caps because of the potential rate cut. You can see here, Bessent urges Fed to lower rates by 150 basis points or more. Why not drop it straight to 0? Oh, goodness. On one hand, we're like, big tech is back. The move's not over. This is the best economy ever. On the other hand, we're like, we really need to lower rates. Like, what? Oh. Both of these things are really hard to be true. What else do we have? Stock futures climb as Fed rate cut bet surge. We saw it. I mean, it's like people think it's a done deal. But I'm really starting to think my man Jer Bear is going to hold, even if he's got 3 people. They're like 2 people voted, 2 people dissented. This hasn't happened in 30 years. I don't think he cares. He's going to run it according to the plan they have. If the plan they have accounts for, hey, there was a bit of a downgrade in the labor market that we have been counting on, and I think we all should agree. We talk about that as a anchor to bullishness all the time. If we see weakness in the labor market, we're absolutely going to adapt to that and make sure that, right, there's a very good chance that a bear market comes along with that. Because people stop contributing because they're losing their jobs, because they start pulling money out. And it goes from just constant net inflows to neutral and then outflows. And if there's outflows, what are the institutions that they have to sell to get the money to pay out? I mean, it's logistical, right? Well, I think you're phrasing it wrong. And I think that's part of like the problem is it's not he's the chairman, so he delivers the message, right? And I'm sure he leads policy decision, but ultimately it is a committee with a vote. So if there was enough votes against him, he doesn't get to be like, I'm still making this decision unilaterally. Just like he doesn't like be like, you know what, I've decided we're gonna remodel stuff, and here we're right. It's like things are done by committee and by, votes and whatnot, and so he's not really. It's not really him, and I don't know if it's caving. I think it's the committee deciding. Based on, and again, they seem to be very data driven. They've been clear. That's what's baffling to me is like they've been clear what they want to see and what would be concerning to them. Well, he is part of the committee for sure. But I think it's the same thing for him. Like if we say cave, that means it's recognizing it's political pressure, and then B, he bows to it. That's a cave. If he changes his mind because the data says, ooh, right, then that's where I think, it's a better decision. So that's what I hope for. We'll see what happens. What else do we see in the news? Trump says he'll speak to allies soon. 2 weeks, I imagine. That seems to be the standard operating procedure for time. We'll let you know in 2 weeks. Okay, let's go look at things. I don't know why we had to wait so long for that. There it is right there. No, let's see. September. Yes. So essentially, that's everyone's saying it's priced in. There's zero chance it doesn't drop. Okay, maybe I'm the one who's like, yeah, they're definitely doing it. I feel like there's still some probability they don't. I mean, let me ask you guys, do you think this is representative, or do you feel like the market could possibly be overzealous? Press says it's happening. I still feel like there's a chance. I really do. I feel like if I don't, maybe I'm wrong. I mean, I'd love to see it. Like at least one drop, maybe two. Oh, you mean the rest of the year? I think that's possible, but I think it would be they go October, December, But maybe I'm wrong. Maybe it is inevitable. Let's go to the watch list. Let's go see what's going on. Out of the ES into the SPY. And let's see. I'm going to actually get myself a little bit more chart. Whoops. And then there. And then okay. 0.37 looks good. What do we say? Let's go to the long term, where we know there's not much expectation. But if anything, this is where it hits 1.5. If it gets straight to this, well, I'm going to say, yeah, let's give it 1.5. That looks like it moves straight through this thing at a faster rate than the angle indicates. 1.5 if it gets to the top. And if it drops all the way back here, I'm still 1.25. This thing really is going to stay what it is or possibly improve. No change there, or if anything, closer to improving. Here, we kept our same score, 1.5. We drew the line. I could draw it, of course. I love drawing lines. We have this trend that we've been basically moving in for quite a few months, and it's right there. Move up towards the top of it again. Fantastic. As expected, looks good. No new volume, so our volume score, which is sort of an equilibrium right now. So there's a little bit more sellers, but that's to be expected. So equilibrium doesn't mean it's a tie. Equilibrium means we're scoring it a 0. An equilibrium for conviction, as it were. Major market. If anything, what are we seeing? Money flowing into the Russell. That's better. That's more bullish. Sector rotation. We know that tech is still looking fabulous. The question is, are we seeing enough movement into other? And the one that I think is showing signs is industrials. Looks like it could see some money, right? And what else did we see yesterday? Financials. So all of a sudden you're like, if we could get financials and industrials participating with technology, then all of a sudden, that posture score raises up a little bit again, and we're like, okay. So yeah, I think, and then the last thing. Oh, one more thing. Don't let me. Can't skip this. Kami, welcome. We literally just started. You're right on time. No, we have been going for a while. Good to see you. The VIX. It's a lower low. Look where we are, 14. And I hope you remember me back here saying it could be looking iffy, but we never project. We don't predict that that's going to happen. We wait for it to happen. Got close here, and we're like, we wait for it to happen. Has to turn, and then here, and then all of a sudden we're at this lower low. VIX score is going up on Sunday. So, if anything, right now, I think we're steering more back towards a 5. Okay, so here's a first question. Do you find yourself doing this on your own during the week, where you think, what's happening now relative to what's happening now relative to the posture and the projections I had? So our posture and projections were slowed down, stabilized this time. We're still bullish, willing to take bullish trades, on the lookout and potentially sensitive to a hedge signal. I feel like that's exactly what we needed to be. And now it looks like, if anything, it could be heading back towards the 5. So I like that. Let's go look at things. Give me your thoughts. It's quiet out there. It's only Wednesday. You can't be quiet on a Wednesday. AAP. I know at least a couple of people still stayed in for this last day, and it looks like you may be getting paid off for it. But it's the day before earnings. They do report before, so be aware of that. Yeah. Likely picked up a little piece on this. If worst case scenario, you maybe broke even. I love trades like that. Didn't do what I wanted. Definitely didn't go against me. Made a little. Apple. Overextended. Waiting for the pullback, but looking to trade the pullback. In addition, Apple, like Microsoft, is a really core component of the stock market strength. When we talk about the market, we talk, well, the S&P, Apple is 6% and Microsoft is 7%. And when we talk about the NASDAQ, Apple is 11% and Microsoft is 10%. So they're large representations. They are important for those indices to do well. And right now, Apple is just kind of broken out again. Higher high. Looks good. Archer Daniels is a new one we picked up. And this is more of a balance as we saw our score drop. But we added some consumer staples like Archer Daniels. And we see it in a nice trend. It's pulling back. If this pulls back into this area, yeah, absolutely, I'd look for something like this to put on to give me a little bit of quasi-defensiveness coming in, right? Amazon. Oh, Okay, so here's the day you would have to decide, did this sneaky reversal, which means you're thinking this was the consolidation and this little flag was the new test. If it holds towards the end of the day, obviously it's not valid 13 minutes in, then we're basically saying we think this is a new low. And yeah, I mean, you could at least think it's running back to this. Whether you think it's going to get higher high than that, 12 points up, yeah, depending on the stop. Right? Sneaky reversal. Sneaky. It's not so sneaky when we were looking for it, though. APH just grinding higher. A little bit of follow through here now on the financials, which is okay because depending on how you draw your line, I mean, my eye is drawn to this line. Where it was like it was trying and it certainly it was like, ooh, maybe we're going to try. And then it's like, nope. However, and this is why I say, like, you know, there's as much art as science. If I draw my line this way, across these tops, it's like right there now. So if it can get through a little higher, then I'm thinking maybe we have one of our reversal patterns coming through here. I mean, they're credit cards, right? It's hard for them to not make money. Bank of America, not a lot of follow through. BTI pulling back. This is another one of our defensives. Everybody needs food and everybody needs tobacco. That's common knowledge. That's why these do well on a defensive basis. Beyond, yeah. So I would still say if you liked it, you could take it and you could look at this from this perspective and say, all right, I'm going to put a stop here and then move it here in one day and look at what that would be for your risk to see if you could punch up here to get this. I don't know. It's a volatile play. So you're just kind of thinking, hey, can this thing repeat that? If not, where would I bail before it rolled? City, not much follow through, but trying. Caterpillar. Oh, ho, ho. Caterpillar. What are my thoughts here? I think maybe right around here, right around this. If we get to that point, then I'd say you're going to see this not just pinch, but give you a little cross. And I'd say, ooh, green light means go. Thoughts? We got some momentum here. A leader in the industrial. We see industrial strength. Funny enough, Press's comment was the last one, so I'm like, looks like a setup to me, and I'm like, heck yeah, me too. Oh, CCJ not following through very much. CELH overextended. CLS overextended. Okay, so yeah, I would say this one for sure. There's my line. You can see it tried and failed back in the consolidation, and this time it was able to bottom out, tried, got through. The next one, as long as it's a higher low, is back in the fold, ready to go. Coinbase, maybe the same thing happening there. Cisco is on a little pause. Delta got a big pop. Delta consumer discretionary. Okay, so you can see that, you have the green candle, but the stochastics are still coming down. A lot of times you'll see this where it's like, then it kind of finds its way, and then, because that's more of a pullback. That was steep for a flag. So we're really more in this, and we think maybe it comes down and then gives us a turn, and yeah, that's something. That's something. We don't need to rush, force it, which at the same time means if all of a sudden it breaks out, Sometimes we miss those. We've got plenty setting up here. The Dow's moving higher today. Dollar Tree. That's another one that is showing signs of setup and adds a defensive. Now, do you take all of these? No, you probably take one or two of these, staples, these more defensive looking ones. EA pausing, but not stopping yet. Estee Lauder. Okay, so this is one I was kind of thinking about. Yesterday I was like on the fence with it. Even now, this could be you have a few days, like 5 days, maybe 5 days, I think. That's your first hike in entry. So I could enter this and put my stop here. Stock's at 93.12, just below the low. Let's say 90.15. That's $3. $3 of risk. Do I think this thing could get to 99 before earnings? Oh, definitely. Look at this move right here. This move here. So could I get 2-1 before earnings, knowing I'm going to move my stop every day likely because it's giving me this candle now? If I got this one, then I move it, then I move it, then I move it, and then I'm out. Hopefully getting I'm out at earnings. So you can see that it's pretty well defined where how this would exit when you see something like this. That's definitely a possibility. I'm thinking, how would I explain that in the trade alert? EXPE, let me get back out of these guys. Yeah, nothing there. Got to wait for it to settle down. Ford, I don't feel like that's done enough yet. Oh, man. Look at Futu. Futu made the move and then some well before earnings. That's a big move today. GE, little pause there. Little pause there on GE Vernova. Gold. It's kind of just, I think gold looks, is anyone trading gold? It looks really choppy in there. I don't see much opportunity. Google, come on, Google. Come on. Yeah, but you can see, same thing here. It's like, oh, it looks like it's falling to the, boom. It looks like it's, so this, can't just lose, like, the first sign of red. No one likes to give back profits. I get that. But we got to give it a little room. Goldman, follow through in the financials. Nice. Hasbro, follow through in maybe even a little breakout for the first time, getting above this. That's nice. Consumer discretionary. Hood overextended, looking for a pullback. Helmet. It's another one of those industrials that's just kind of knocking. All we need is a little buying pressure, and that could give us something. IBM is down. %1 on the small caps. Not much follow through yet on Joby. KKR, a little bit of follow through, not a lot. Okay. Woo! Lumentum has momentum. Is this earnings? Yeah. Aftermarket, and they gapped up even higher. Goodness gracious. They look good. Las Vegas Sands, eking higher. Meta, Morgan, follow through on Morgan. Microsoft, come on Microsoft. But sitting around, right around the entry, looks good. Micron hitting some resistance. Netflix is hitting some resistance, but broke its consolidation. Nvidia stalling. Pagaya. Okay, so now we look to see, can I get through this or not? Palantir overextended. The Q's looking bullish. Roblox. We'll see. It's kind of wondering if it tasted something up here that it was like, I'm not sure about that. A little reluctant to make a run back in there again. We'll see if that one. Reddit's not afraid. It just keeps going higher. That looks very bullish, but need a pullback for an entry. Rocket Lab. Kind of that same thing, right? It looks very, very unsure if it's going to make another run. But let's be patient. RTX, that looks like a possibility to me. Silver, a little bit higher. Still kind of funky compared, better than gold, but SoFi made it to new highs. Another financial. The SPY looks good today. TME, big move up. Tesla still looking more and more bullish again. TSM hitting resistance. Uber is paused. Visa looking like it wants to move. VRT, it was trying, and then all of a sudden today it was like, whoa, wait a second. We'll see what happens there. Walmart dropped back. I mean, you can see, what do we have? We had 3-4 days in a row after this big move where it's like tried and failed. Moved a little higher, engulfed, and now it's dropping. And it's like, yeah. Okay. I think it looks pretty good, actually. For looking at this thing, checking in halfway through the week, if anything, it looks to me like posture is going to improve. Bullish trades are working. New bullish trades are setting up. And we're seeing positive signs. The X's, heck yeah, I'm just right there. It's a perfect time. I don't even know if I have them all still, but let's see what I do have. Basic materials, XLB. A little bit down, a little bit, kind of showing a little more weakness. That's fine. Basic materials, things are cheaper. Communication services, solid and accelerating. Energy, stable, right? Stable. Financials, sideways, but starting to get a little bit of increase. Industrials maintained their trend. Looks like they could be on an upswing. Technology, the champion, the king of the jungle. Technology. Consumer staples. You can see, right? It was just kind of listless, and then boom. This is the one that was subtle, but added some to our list. And I think the ones we added to our list are leaders in this. This thing was kind of this way, and then it broke out, and now it's like this could be some defensive posturing through here. And what do we have? We have 3 already uptrending leaders of the consumer staples space. Well done, us. Pat yourselves on the back. We did it. I don't know. Maybe not. Healthcare. Let's see. What am I missing? XLY. Consumer discretionary. Ooh, consumer discretionary. Do I have that? I don't have that. Let's type that in here. I'll put that. XLY, yeah, you can see that the consumer discretionary is looking good. Little breakout. That looks more bullish than not. I swear it's not XLH. What is healthcare? XLV. XLV. Healthcare. Ooh, I nailed it. Yeah. XLV. I added that one. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 core sectors. That makes sense. XLV, healthcare. No, nothing really there in healthcare. So there it is. I made sure our list is clean. That is 9 core sectors now in our XLs. What do we not see as we look at defensive sectors, as we look at the Dow? We don't see posturing of like, ooh, money's flooding in here and pausing. It's not pausing. It's flowing steadily into technology. We see that in the sectors. We see that in the major market. It's increasing into small caps. We see that whether it's just like early anticipation of the cut, which seems to be very much priced in, and then some. Great. You guys know I would love a bullish fall. Would love a bullish fall. I feel like we deserve a bullish fall. You know? Now we look at the sectors. The sectors show money coming into growth sectors, financials, industrials. In addition, that's something. I mean, yeah, everything's coming up pretty tip top. So, one more time for those who were not here in the beginning. Today's message about your trading plan, which today is record keeping, which means keep a log, and within that log, do some journaling about, hey, what did you think? What happened, right? Talk about it so that a month or two later, when you look back at a trade, you don't go, oh, what was I thinking? If you want to know that, write it down. For me, these days, I know what I was thinking, pretty much like 90 to 95% of the time. There's certainly still times where I'm like, oh, what did you see, do you think there, buddy? But if you get the log in place, it's going to spit out all the analytics. So when we look at the analytics, that's not we need to go calculate the cumulative and by time frame and by blah blah. No, it's these are things that are done for us if we do the record keeping first. And remember the quote: show me a good record keeper, and I will show you a good trader. Psh, and stop. Okay. And look at that. Like, right on time with that amazing mic drop moment. I'm sure we were all just felt a little chills at that. I did. I don't know if you guys did, but I did. Okay. Still today, Glenn will be here. Hopefully, you guys might be like, so is the schedule changed? And he's like, what are you talking about? So hopefully, I'll go text him now just to make sure that doesn't happen as I think about it. Yeah. Okay, so that's a good idea, Scott. Text Glenn. It's good to see everybody. So Glenn will be here this afternoon for an hour. Tomorrow night, same as usual. 2 sessions back to back. Friday schedule as normal, and the Friday schedule won't change. The only, for anyone who missed it, the proposed change, which is moving into place either next week or the next, or some combination, right? Could be second half of next week is going to be Monday nights are no longer going to happen. That is moving to Tuesday mornings to be a market session. Wednesday afternoon will no longer happen. That's going to move to Thursday morning. So it's now going to be a Monday through Friday morning coverage, but only Friday afternoon market. So there we go. We hope you like it. Give us feedback. It's good to see everybody. Have a great rest of your day. I will see you tomorrow. And, I'm glad you liked that already. Kami, thank you for letting me know. And happy trading.